If you like the idea of dividend stocks, but hate the idea of waiting forever to get paid those dividends, then this series is for you.
Now you're talking.
Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and in this series, I spend hours doing research to find the hidden gems of the dividend world so you don't have to. For example, this week, there were 69 stocks that had an ex-dividend date between July 7th and July 11th of 2025. 29 of those stocks showed that they can not only pay, but also grow their dividend for at least 5 consecutive years, and only 11 of those stocks were able to make the risk of investing into individual stocks worth it by also outperforming the S&P 500 over a long period of time. I then took those 11 stocks and picked my 5 favorites to share with you guys today.
Doing the Lord's work, buddy.
It's important for you guys to put this series on your calendar and tune in each and every Friday at 8 a.m. Central Standard Time, because every single stock from today's video is going to have an ex-dividend date of this coming week, which simply put is the date you must own the stock before in order to get paid the next dividend from that company. Now, before we get to the good stuff, do me a favor, tap on that like button to tell YouTube I'm doing good work over here. And now let's get to number 5 on this week's list, which is Erie Indemnity, stock ticker ERIE. Including today's video, this is now the 8th time I've spoken about this stock right here on my channel, including 8 selections in a row. And if you go back to the very first time I spoke about it, which was in episode 68 or September 29th of 2023, Erie is underperforming since that first mention over the shorter term. And this next slide is going to show you why that is and why I still like it for the longer term. Erie Indemnity is a quarterly payer in the financial sector, paying $5.46 per share per year with a forward dividend yield of 1.6%. Erie Indemnity has been paying and growing its dividend over the last 35 years. They have a 3-year dividend growth rate of 7.19%, a 5-year dividend growth rate of 7.21%, and a payout ratio at 39.67%. Now, here's what I was alluding to earlier. At the time of recording, over the past 52 weeks, Erie Indemnity is trading 37.76% off of its 52-week high, which is why it's underperforming over the short time frame. They have an ex-dividend date of July 8th with a payout date of July 22nd, and looking at their chart over the past 10 years, here's where the long-term performance really shines through. That $10,000 investment would have been turned into $53,031.72, which outperformed the S&P 500 by $17,478.85. Next up on this week's list, coming in at number 4, is Oracle, stock ticker ORCL. Including today's video, this is the very first time I'm ever talking about this stock right here on my channel, so let's learn a little bit more about this one. Oracle is a quarterly payer in the technology sector, paying $2 per share per year with a forward dividend yield of 0.95%. Oracle has been paying and growing its dividend over the last 16 years. They have a 3-year dividend growth rate of 16.04%, a 5-year dividend growth rate of 15.82%, and a payout ratio sitting at 24.48%. Now, at the time of recording, Oracle was only trading 3.08% off of its 52-week high. They have an ex-dividend date of July 10th with a payout date of July 24th, and over the past 10 years, Oracle would have turned that $10,000 investment into $60,466.99, which outperformed the S&P 500 by $24,914.12. Next up on this week's list, coming in at number 3, earning the bronze medal, is MasterCard, stock ticker MA. Including today's video, this is now the 10th time I've spoken about this stock right here in this series, including 8 selections in a row. And if you go way back to the first time I spoke about it, which was in episode 3 or July 1st of 2022, MasterCard is outperforming with over a 75% total return in just under 3 years. So let's dive into the numbers behind this one. MasterCard is a quarterly payer in the technology sector, paying $3.04 per share per year with a forward dividend yield of 0.55%. MasterCard has been paying and growing their dividend over the last 14 years. They have a 3-year dividend growth rate of 24.59%, a 5-year dividend growth rate of 20.29%, and a payout ratio sitting at 16.33%. Now, at the time of recording, MasterCard was trading 7.46% off of its 52-week high. They have an ex-dividend date of July 9th with a payout date of August 8th. And looking at their chart over the past 10 years, that same $10,000 investment would have turned into $63,198.82, which outperformed the S&P by $27,645.95. Now, really quick, before we get to the rest of the list, if you guys want to continue to help me grow the channel the right way, use that comment section down below. You guys can let me know what you guys think of this week's list, any stocks you own from this week's list, and how they're doing for you. But now let's get to the rest of the list. Next up on this week's list, coming in at number 2, is Cadent, stock ticker KAI. Including today's video, this is now the 10th time I've talked about this stock right here in this series, including 10 selections in a row. And if you go back to the very first time I spoke about it, which was in episode 43 or April 7th of 2023, KAI is outperforming to the tune of 24.5% per year since that first mention. So let's take a peek at this one right here. Cadent is a quarterly payer in the industrial sector, paying $1.36 per share per year with a forward dividend yield of 0.43%. Cadent has been paying and growing its dividend for the last 12 years. They have a 3-year dividend growth rate of 16.97%, a 5-year dividend growth rate of 11.71%, and a payout ratio sitting at an even 13%. At the time of recording, Cadent was trading 27.08% off of its 52-week high. They have an ex-dividend date of July 10th with a payout date of August 7th. And looking at their chart over the past 10 years, Cadent would have turned that $10,000 into $73,146.07, which did outperform the S&P 500 by $37,593.20. And here it is. You made it to the number 1 stock on this week's list. The stock you must know about going into next week is Intuit, stock ticker INTU. Including today's video, I've now spoken about this particular stock on this particular series 13 different times, including 13 times in a row. And if you go back to the first time I spoke about it, which was in episode 3 or July 1st of 2022, Intuit has averaged almost 27% and has returned over 100% since that very first mention. Now that I have your attention, let's dive in. Intuit is a quarterly payer in the technology sector, paying $4.16 per share per year with a forward dividend yield of 0.54%. Intuit has been paying and growing its dividend for the last 14 years. They have a 3-year dividend growth rate sitting at 24.66%, a 5-year dividend growth rate of 19.73%, and it is sustainable because the payout ratio sits at 18.11%. Now, at the time of recording, Intuit was only trading 1.35% off of its 52-week high. It has an ex-dividend date of July 10th with a payout date of July 18th. And over the past 10 years, you guys can see that $10,000 investment would have been turned into $83,327.48, which outperformed the S&P 500 by $47,774.61 in the same time frame. Now, really quick, before you guys leave and click off the video, I need you guys to remember these 3 dates. This video comes out on July 4th of 2025. The earliest ex-dividend date from this week's list is on July 8th of 2025, meaning your decision is going to be due by July 7th of 2025 if you want to make sure you're first in line to get the very next dividends from these great companies. With that being said, you 100% missed every ex-dividend date in last week's video, but if you're still in the market for 5 super high quality dividend stocks, you can check that out right here. But until next time, see ya.